This inflation is not the fault of the Fed. It's not the fault of the U.S. government for running these huge deficits. It's all because of these pesky supply chain bottlenecks and the tight labor market, right? That's it, right? Always pointing fingers, never accepting responsibility.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
I want to start off by reading some quotes from Powell. This got kind of a lot of press, and it caused people to think that maybe the Fed is pausing. Because remember, on my last podcast that I recorded on Thursday, that was the day before Powell and Bernanke spoke. But on that podcast, I talked about how 3 Fed officials had come out that day, and they really talked tough about why we need more rate hikes and why we're going to hike in June, that we can't pause because inflation is still a big problem. And so the markets didn't like that and reacted. Gold got hit and everything. Well, gold rallied, I think, $20 on Friday because of what Powell said. Because now all of a sudden Powell put the pause back in play. That is the June pause for this upcoming meeting. But so here's what he said. Quote, "The financial stability tools help to calm conditions in the banking sector. Right? Developments there, on the other hand, are contributing to tighter credit conditions and are likely to weigh on economic growth, hiring, and inflation." So Powell thinks that these tighter credit conditions are going to push down economic growth and inflation and hiring, because he thinks inflation is a byproduct of hiring and economic growth. He's wrong. See, he thinks tighter credit is going to hurt the economy, which is going to, put downward pressure on inflation. It's not. It's actually going to put upward pressure on inflation. He just doesn't understand that. Let me finish the quote. So as a result, our policy rate may not need to rise as much as it would otherwise have had to achieve our goals, right? So in other words, Powell said, wait a minute, because of these tightening credit conditions that just happened because of the banking crisis and the effect that these tighter credit conditions are going to have on employment, the economy, and inflation, we may not have to raise as much as we thought. So in other words, we can pause, right? This is what people were reading into those remarks, and it makes sense based on what he said. Then he continued. He said, "We've come a long way in policy tightening, and the stance of policy is restrictive, and we face uncertainty about the lagged effects of our tightening so far and about the extent of credit tightening from recent bank stress." So he's saying, hey, we've come a long way and our current policy is tight. So according to Powell, 5% Fed funds, 5 to 5.25, is tight. It ain't tight. It's still easy. It's just less loose than it was, but it's not tight because inflation, even the way the government measures it, is 5%. So you're talking about 5% inflation, 5% rates, 0% real. You're not restrictive. Remember, when interest rates were 20% in 1981 under Volcker, inflation got no higher than 13.5%. And that was a much more honest 13.5%. In fact, if you measured inflation in 1981, the way we measure it today, inflation was probably 6 or 7, right? And interest rates were 20. So you had interest rates that were likely triple the actual inflation rate. So today, to get to where we were back then, the Fed would have to take interest rates up to 15%, right, to be at the same level. If you believe the 5%, we're not even close, right? So we don't have tight money, but according to Powell, we do. Then he said, having come this far, we can afford to look at the data and the evolving outlook to make careful assessments. See, that implies they're going to pause to look at the data, right? Because you can't keep looking at the data if you're zooming by, with rate hikes. So all of that suggests a pause, right? That's what happened on Friday. Of course, on Monday, you had a couple of Fed guys, including Bullard, throw cold water on that pause, because Bullard came out today and he said that he thinks we need at least 2 more rate hikes, and that would be appropriate because of the robust economic growth and the persistently high inflation. Well, he's right about inflation being persistently high, but there is no robust economic growth. I don't even know what he's talking about when he talks about robust economic growth. Where is he seeing that? I mean, that's not even in the government numbers. The only thing you can point to is the low unemployment rate, right? That we have. But that number is meaningless because there's so many unemployed people who don't count and so many people who have multiple jobs now because inflation is so high and they've lost their good job. They've had to replace it with 2 or 3 bad jobs. So you've got all these jobs being created for people that would rather not have them. They prefer the good job they lost to the 3 crappy jobs they got now. But so these numbers don't really tell the story of a strong economy. But again, Bullard thinks, oh, we got a strong economy. That means we have to cool it down. But even if he's right and we have 2 more rate hikes, that's really not that much. If you're at 5 and we're going to 5.5, right? I mean, that's not that big a deal. And then, of course, the rate cuts. Because as soon as the Fed stops hiking, we all know that everybody expects the next move to be a cut. Because that's what we do. We have these cycles. The Fed keeps hiking until something breaks, and something already broke. And then at some point, it gets broken bad enough that they have to fix it with a rate cut. Of course, the rate cut doesn't fix it, but that's what they do. It ultimately makes the problem they broke even worse. But the markets, they don't give a damn about that. They just know how this movie plays out because they've seen it many, many times before. And so they are getting ahead of it, and they're doing it by buying tech stocks. Now, if they really understood how the movie's going to end this time, they would be buying gold stocks instead of tech stocks. Anyway, let me get into some of the other gems that Powell was casting out there during this thing. So, again, Powell said, and this is one point that he actually got right in a way, so I'll give him credit for that. And it's an ominous forecast that people missed. But he said that a reason that we had low inflation in the past was because the global supply chain helped to lower costs, right? Because we were importing so much stuff from China and over other places, and those imports were lower, that helped to contribute to lower consumer prices. And that he thinks that those days are gone and they're not coming back. And so we're not going to get the help that we had in the past from the global supply chain. And he is correct to a point. The global supply chain, right, the ability to import cheap stuff from China, that didn't keep inflation low. That kept prices low because the inflation was there. The government kept creating it by expanding the money supply. What cheap imports from China did is help disguise that inflation because we couldn't see it because the Chinese and everybody else were helping to lower prices even as the Federal Reserve was creating inflation. Now, obviously, let's say that prices went up by 2%, even though they printed all this money, because of all the cheap stuff that we were importing from China and other places. Well, what if the Fed didn't print all this money, but we still imported all that cheap stuff from China? Maybe instead of prices going up 2%, they would have dropped by 5%. So in other words, instead of getting 5% reduction in prices, we got a 2% increase. That's 7%, right? As far as I'm concerned, prices are 7% higher approximately than they would have been because of inflation. Now, of course, Powell would have to say, well, that would have been a disaster. I mean, if prices went down by 5%, all hell would have broken loose. It would have been another Great Depression. But of course, that's all BS because if prices would have gone down by 5%, it would have been great. It would have meant that people have more money to buy other things, to buy more stuff. Aggregate spending would go up if prices went down. It's the reverse of what's happening now. Prices are going up so much for like food and energy and rent that consumers don't have anything left over to buy other stuff. So real sales are falling. what if prices went down for so many things, right? That would have just freed up a lot of purchasing power. So it's BS that we would have suffered if the cost of living went down, and thank God it went up. But also, it means that, yes, the Chinese were able to disguise this inflation. That's how we got away with it. Right? We got away with creating all this inflation because of all the cheap imports that disguised the price increases. Now, people didn't realize that they would have got a big break, that they would have had a big cut in prices if it wasn't for all that inflation. See, because you don't realize the benefit that you would have had. So when you see prices go up 2%, you're like, oh, that's good. It's good they didn't go up 4 or 5%. You don't realize that if the government didn't create that inflation, you would have been able to buy everything for 5% less. So you don't know that. So you can't be upset because you lost something that you never had and you never expected. So yes, it created all this political cover. But what Powell is admitting is that that cover's not there anymore. So now when the Fed creates inflation, we're all going to know it. We're all going to see it because it's not going to be disguised by these global supply chains. Now, at least Powell gets that, right? I don't know how many other people got that point that he was making, but it is significant and you have to understand it, because if you do, then you understand that the Fed is never going to succeed in its goal of getting inflation back down to 2%. Now, I wonder if Powell knows that, because he certainly pretends that he's going to do that, but understanding that point might suggest that he knows that he's full of it. Okay, now, he also blamed the current high inflation on supply shocks and the tight labor market. That was pretty much it. I think he was asked about, why we have inflation, and that was it, right? So just like Bernanke was wrong about why we had inflation in the 70s, Powell was wrong about why we have inflation right now, right? He didn't admit that it was Fed policy. He didn't go back to QE1. He's got, Bernanke sitting right next to him. He could have said, you know why we have so much inflation? Because of the guy sitting next to me. That's why, right? He created all the inflation, long before I got here, right? And we're just dealing with the consequences. No, he's not blaming Bernanke, and he's not accepting any responsibility himself for all the money that he printed while he was there. I mean, he was still printing money. He had rates at zero a year ago, just over a year ago, when it was clear consumer prices were soaring, and this guy was still buying treasuries and buying mortgages, and he had interest rates at zero. So no, this inflation is not the fault of the Fed. It's not the fault of the U.S. government for running these huge deficits. It's all because of these pesky supply chain bottlenecks and the tight labor market, right? That's it, right? Always pointing fingers, never accepting responsibility.